In today's hyper-connected financial world, it often feels like you're caught in just this constant current of breaking news, right?
Yeah.
And intricate analyses, expert opinions flying everywhere.
A lot, definitely.
Yeah, every market ripple seems to demand an immediate reaction.
Yeah.
And trying to sift through all that information, find the true signal amidst the noise, well, it can be, frankly, overwhelming.
Absolutely. Information overload is real.
You're looking for clarity, right? For that strategic edge that helps you understand not just what is happening, but why it actually matters.
That's the key. The why.
That's exactly why we're here today. In this deep dive, we're aiming to cut through that static, bring you a focused look at Coinbase, a formidable force in the cryptocurrency landscape.
A giant, really.
Yeah, a giant. We're going to explore this company through the exceptionally precise lens of a top trader's analysis. We want to unearth the strategic rationale behind Coinbase's recent moves, pinpoint those critical technical signals guiding potential investment decisions, and dissect the broader market forces shaping its trajectory. Our mission really is to equip you with the essential insights you need to be truly well-informed about what might be next for this really influential company. Let's unpack this.
Okay, so the insights we're drawing on today come mainly from an in-depth commentary by top trader JinLog, specifically their analysis titled Coinbase, Bitcoin Breakdown Tests Midterm Supply Zone. Is this the next swing entry?
Right.
And this isn't just, your basic market update. It's a really granular look at the methodology, the exact levels a seasoned professional uses to navigate these notoriously volatile crypto markets.
It gives us a real window into that disciplined approach, doesn't it?
It really does. A very disciplined approach.
And that disciplined approach, it's immediately evident when you look at JinLog's foundational trading philosophy. It's honestly like a breath of fresh air in an ecosystem that's often just characterized by these rapid-fire reactions, impulsive decisions.
Totally. The react now, think later trap.
Exactly. JinLog highlights this profound danger. The urge to react to every single piece of news, every tweet, every fleeting price movement that flashes across your screen. This, they argue, inevitably leads to something they call overtrading.
Overtrading, yeah. A classic pitfall.
Think about a time, maybe you saw a headline, felt that surge of panic or excitement, made a quick buy or sell, only to watch the market reverse course. It leaves you questioning your decision.
Right. Been there. I think most people have.
JinLog very clearly articulates that this kind of reactive, undisciplined behavior isn't just frustrating. It actively eats away at both your capital and your time.
That's a powerful way to put it. Eats away at capital and time.
It's an incredibly costly habit.
Yeah.
Drains your financial resources, your mental energy, pulls you away from a more strategic, maybe longer-term focus.
It's an absolutely crucial point, and it resonates, I think, deeply with anyone who's spent time in these volatile markets. The sheer volume of information today, it can be paralyzing. It creates this almost irresistible urge to constantly do something.
Right, the fear of missing out, maybe.
Yeah.
Or just the need to feel in control.
Exactly, and that leads to impulsive decisions, not well-considered strategic ones. JinLog's philosophy is essentially about empowering you, the individual, through discipline, through a structured approach.
Okay.
By actively resisting that constant urge to react to every flicker on the screen, you're not just saving money from, unnecessary transaction fees. You're conserving your mental capital.
Mental capital, I like that.
Yeah. And this allows for far more deliberate and ultimately potentially more profitable actions. It shifts you from being just a reactive player to a strategic participant.
I can certainly relate to that feeling of always needing to be on. It's exhausting. So, okay, to combat that common overtrading trap, JinLog champions a specific methodology they've developed. It's called VPAR rhythm trading.
VPAR, right?
Right. No, this isn't some vague concept. VPR actually stands for volume, price, activity, and range.
Okay, volume, price, activity, range. Got it.
It's designed to analyze these 4 dimensions of market data, to identify the underlying momentum, and crucially, to capture the precise timing of the overall market flow.
So it's not about predicting every tiny wiggle.
Exactly. It's about understanding the deeper, more powerful currents that dictate the real direction. And JinLog then takes that broader market rhythm and sharpens the focus dramatically. They concentrate their attention solely on key news and events at major support levels.
The MAC points.
Yes, which they refer to as MAC points.
What's truly fascinating about VPAR rhythm trading is how it offers such a systematic, structured way to approach market engagement. It effectively blends, both macro and micro analysis.
I so.
Well, JinLog explains it involves a rigorous blend of broader sector analysis, deep dives into individual stock performance, and crucially, live index monitoring, especially during their broadcasts, they say.
There's a multi-layered.
Very much so. This multifaceted, systematic approach isn't just about identifying potential opportunities. It's fundamentally designed to meticulously manage risk while at the same time aiming for higher, more consistent returns.
Which sounds like the holy grail for traders, right?
Yeah.
Manage risk, aim high.
Pretty much. And for you, the listener, it provides a robust framework that moves far beyond just gut feelings or, relying on the daily headlines. It offers a methodical way to think about when and how to engage with the market, aiming for a more predictable, disciplined outcome.
Building a repeatable process, maybe? Not just relying on luck?
Exactly that. Building a process rather than relying on luck or emotion.
Okay, speaking of precision and specific numbers, let's zero in on Coinbase's current market snapshot, because JinLog provides some incredibly specific technical details here that are absolutely crucial for understanding its present situation.
Mm-hmm.
Right now, as per their analysis, Coinbase is trading around $314.69. But that precise number isn't the whole story, is it?
No, not at all. It's sitting at a really critical juncture.
Which is
Coinbase is testing midterm supply around $283. And this is happening right after Bitcoin, which, often acts as the primary bellwether for the whole crypto market.
right.
It recently broke below its short-term trend line, and it went through a significant swing support test at its trendline supply.
Okay, so midterm supply around $283. What does that mean exactly, supply?
It indicates that Coinbase finds itself at a truly pivotal point. That price action around $283 isn't arbitrary. It represents a key level where a significant concentration of sellers or supply has historically shown up.
So resistance level, basically.
Exactly. As the price approaches $283, there's an expectation that more sellers will enter the market, creating a natural resistance barrier for the price to move higher. And when we talk about trendline supply, we're referring to a downward sloping line on a chart connecting previous price highs.
Okay, like a ceiling that keeps moving down.
Sort of, yeah. It acts as dynamic resistance. As the price nears it, sellers tend to emerge. So, Bitcoin's recent move breaking its own trend line and testing its trendline supply signals broader market weakness.
And Coinbase is feeling that pressure.
Directly contending with it, yes, putting considerable pressure on its own immediate support levels. It's a classic example of how the macro crypto environment directly influences individual assets like Coinbase.
Now, this is where it gets really interesting, particularly when we dig into the nuances of strategic entry points. JinLog specifies that both short-term and swing entry points for Coinbase require trap resolution confirmation before entry.
Right.
I have to ask, what exactly does trap resolution even mean in this context? It sounds a bit like, spy jargon.
Yeah, does sound a bit dramatic. But it's an excellent question, and it's a technical term that is absolutely vital for disciplined trading, especially in volatile markets like crypto.
Okay, break it down for us.
In simple terms, a trap in trading refers to a deceptive market movement. It initially appears to confirm a certain direction, like a price might seem to break out above resistance, signaling a strong up move.
Or break down below support, signaling a drop.
Exactly. But then this initial movement quickly reverses. It traps or ensnares traders who acted prematurely based on that false signal.
The classic fake out.
Pretty much. So trap resolution is the specific technical signal that indicates this deceptive, misleading movement has been negated. It confirms the market has processed that false signal and is now showing a clearer, more reliable, sustained direction.
So you wait for the dust to settle, essentially.
It's a mechanism to avoid those costly false signals.
Mm-hmm.
It forces a level of patience and demands concrete confirmation before you commit your capital. It's about letting the market prove its true intent first.
Okay. So it's about waiting for the market to basically say, all right, this isn't a trick, this is the real deal, before you jump in. That makes a lot of sense. Reduces risk by increasing certainty.
Precisely.
And JinLog also specifies a midterm entry zone. That sits firmly at $283, signaling this is a truly significant level for strategic accumulation, implying maybe a longer-term perspective.
Exactly. That 283 level isn't just a resistance point being tested, it's also identified as a potential strategic entry for those looking at a midterm horizon. It suggests it's a price where, smart money might look to build positions incrementally.
Okay, building positions. Which brings us nicely to the concept of MAC points.
Yes, the MAC points. These are major support levels that JinLog meticulously identifies. Think of them as predefined high-probability buying zones.
How are they identified? Is it just looking at past lows?
It's more than that. These MAC points are typically established by analyzing historical price action, identifying specific levels where significant buying or selling pressure has historically occurred, creates a strong floor or ceiling. They often align with major liquidity zones or prior consolidation areas.
So these MAC points are like predefined anchors for a trader, guiding decisions away from emotion towards a system.
That's a good way to put it. Anchors. For Coinbase, JinLog identifies a swing MAC point at $268 and a midterm MAC point at $226.
Okay, $268 and $226.
And these aren't just arbitrary numbers. They're described as box range bottom and ideal tranche buy zones.
Tranche buy zones, meaning buying in pieces.
Exactly. This really helps you, the listener, visualize potential entry strategies, moving beyond those emotional, impulsive reactions towards a more informed, step-by-step decision process, especially if you're looking to accumulate an asset over time.
Buying in stages. That makes sense for managing risk.
Absolutely. These MAC points provide a clear roadmap for strategic accumulation, allows an investor to scale into a position, not deploy all capital at once. This tranches approach is a classic risk management technique, particularly in volatile assets like crypto-related stocks.
So if the price drops further, you haven't gone all in at the top.
Right. You can average down your cost basis. Conversely, it ensures you're positioned if the price rebounds without having missed the boat entirely. It's about managing exposure and optimizing entry, not trying to perfectly time the absolute bottom.
Makes sense. Okay, let's shift gears a bit. Let's talk about Coinbase's financial resilience. Because it's not all just about the chart patterns, right?
Yeah.
JinLog's analysis points to some really interesting underlying strengths that maybe aren't obvious at first glance.
Definitely.
On the surface, if you just look at the Q2 revenue figures, they might seem a little concerning. A 16.7% fall, attributed mainly to lower transaction volumes.
Yeah, that headline number doesn't look great in isolation.
You might see that and immediately think, uh-oh, trouble brewing.
Right. But what's truly fascinating here is how these figures, which might initially signal a setback, actually paint a picture of, well, profound operational strength and robust liquidity when you dig deeper.
Okay, how so?
Well, while transaction volumes were lower, reflecting that broader slowdown in the crypto market, Coinbase still managed to deliver an adjusted earnings per share, EPS, of $5.14.
$5.14 adjusted EPS. Okay.
More importantly, they generated a staggering operating cash flow of $942 million. That's a massive influx of actual cash from their core operations.
Wow, nearly $1 billion in operating cash flow.
Yeah. And this is further bolstered by robust cash reserves, totaling an impressive $4.7 billion on their balance sheet.
$4.7 billion in cash.
This combination points to a meticulously well-managed balance sheet, significant financial fortitude. It means even when their main revenue stream, trading fees, is under pressure from market conditions, the company has ample cash and operational efficiency to weather downturns.
So they can invest in growth, maintain stability, without running to borrow money.
Exactly. It signals that Coinbase is built to last through market cycles, not just thrive during the bull runs.
That's a huge distinction. It's not just about the revenue number in one quarter, but how efficiently they're managing things and how much liquidity they have. Speaking of holdings, Coinbase isn't just a platform. They hold Bitcoin themselves, right?
They do indeed. A significant amount. JinLog highlights that Coinbase has a total of 11,776 BTC on its books, which at the time of the analysis was roughly $740 million.
$740 million worth of Bitcoin.
And what's really striking is that this represents a notable increase. They added 2,509 BTC year over year.
So they're actively adding to their Bitcoin holdings.
Yes. And this particular detail is a powerful signal. It goes beyond just the financial figures. When a major crypto exchange whose business is inherently tied to the market holds such a substantial amount of Bitcoin and is increasing those holdings,
it shows confidence.
It conveys a profound sense of long-term confidence in Bitcoin's value proposition. It's not just an asset on their balance sheet, it acts like a strategic reserve, kind of like digital gold for a digital asset company.
Putting their money where their mouth is.
Precisely. Demonstrating conviction in the very assets they facilitate trading for. For you, the listener, this reveals Coinbase's dual role. They're not just a neutral platform, they are also a significant invested player in the crypto asset space itself.
Which impacts their stability, market perception.
Absolutely. And it underscores their belief in the long-term future of the digital asset economy, a deep alignment.
All right, let's talk about that future then, because Coinbase isn't just sitting back, right? They're actively innovating, forging strategic partnerships that could genuinely redefine their position in the broader financial landscape.
Very active.
The first one that really jumps out is their partnership with JP Morgan.
Yeah, that's a big one.
Not just any bank, a true titan of traditional finance, TradFi. The specifics are fascinating. This collaboration will enable direct USDC conversion and purchases via Chase credit cards, set to launch later this fall.
The significance of this partnership really can't be overstated. JP Morgan's influence in TradFi is immense, globally. Their willingness to integrate directly with a crypto giant like Coinbase sends a powerful message to the whole financial industry.
Like a stamp of approval, almost.
In a way, yes. It lends a crucial layer of mainstream legitimacy to crypto assets, and it clearly signals a gradual yet undeniable integration of digital assets into established banking systems.
And what about for USDC itself?
For USDC, this partnership is a massive boost. It significantly bolsters its position as a leading stablecoin, solidifies its role as a critical bridge for fiat on-ramps and off-ramps in the crypto ecosystem.
Making it easier for regular people to get in and out of crypto using their bank.
Exactly. This isn't just a new payment method. It's about systematically lowering the barriers to entry for millions of traditional banking customers, making crypto more accessible and, crucially, potentially setting a precedent for other major financial institutions to follow suit, accelerating broader adoption.
It's truly a monumental step, bridging that gap between TradFi and crypto, making digital assets more approachable through channels people already trust. But Coinbase isn't stopping there.
No, they're not.
They've also previewed what they're boldly calling the Everything Exchange, this ambitious all-in-one app vision.
The Everything Exchange, yeah.
And it's not just about trading more cryptocurrencies. It's explicitly designed to support on-chain trading of tokenized stocks and derivatives.
Tokenized stocks and derivatives. On-chain.
That sounds like a potential game changer for the whole industry.
It absolutely is, and it's a strategic move with profound implications. This Everything Exchange vision significantly strengthens Coinbase's platform moat, their competitive advantage.
How so? By offering more stuff.
By expanding their offerings far beyond just traditional crypto into a much broader spectrum of digital assets, enabling on-chain trading of tokenized stocks, derivatives. Coinbase is positioning itself not just as a crypto exchange, but as a central hub for a much wider range of digital financial instruments.
Competing, maybe even with traditional stock exchanges down the line.
Potentially blurring those lines, yes. This is critical in what many are calling the crypto super app wars, where platforms are vying to become the single, indispensable go-to app for all digital financial needs.
The one app to rule them all.
Kind of. This innovation aims to diversify revenue, maintain pressure on transaction revenues by dramatically expanding the types of assets traded on their platform, catering to a much wider user base and investment appetite.
For you, the listener, just imagine that convenience. Expanded access. Having diverse assets, Bitcoin, tokenized shares of, Apple or something, all accessible, tradable in one seamless platform.
It could radically simplify investment, reduce friction between asset types, potentially open up entirely new avenues for capital formation, trading.
Huge potential. But of course, any big innovation, especially in finance, always bumps up against the regulatory landscape.
Always.
On that front, JinLog highlights some genuinely positive developments, some regulatory tailwinds.
Indeed. There are significant regulatory tailwinds emerging, specifically from the U.S. Genius Act and the Clarity Act. These are crucial.
Why are they so important?
Because these pieces of legislation are designed to set a formal framework for USDC issuance and distribution. They provide much-needed regulatory certainty around stablecoins.
Okay, clear rules for stablecoins.
And if we connect this to the bigger picture, regulatory clarity is a massive de-risking factor for the entire crypto ecosystem. For years, one of the biggest uncertainties, a deterrent for institutions, even larger retail users, has been the ambiguous, often shifting legal landscape.
Right. Nobody wants to invest heavily if the rules might suddenly change.
Exactly. These acts provide much-needed legal certainty around how stablecoins like USDC should operate, fostering greater trust, encouraging broader institutional adoption, potentially unlocking vast amounts of capital that have been sitting on the sidelines due to that uncertainty. It's a foundational step towards mature market infrastructure.
That's huge for stability, future growth. Gives participants more confidence. And there's another major regulatory hurdle Coinbase is actively trying to clear right now, isn't there?
Yes, their ongoing SEC application for security token approval.
Security token approval. What are the broader implications if that crucial approval actually comes through?
Oh, approval of that SEC application would be absolutely monumental. It would directly enable on-chain equity trading.
Yeah.
Meaning traditional company stocks, the ones we're all familiar with, could potentially be tokenized, represented as digital tokens, and traded on a blockchain, bringing the inherent advantages of blockchain transparency, efficiency, potentially lower costs to the vast world of equities.
Wow. So trading Apple stock like you trade Bitcoin, basically.
Conceptually, yes. This raises an incredibly important question for you, the listener. What kinds of completely new investment opportunities could this unlock, accessing markets in ways previously impossible?
And maybe changing finance itself.
Perhaps even more fundamentally, how might this innovation reshape traditional finance as we know it, potentially blurring the lines between what we currently call a stock market and a crypto exchange? It could lead to a future where all assets, regardless of their nature, can be traded seamlessly on a single, secure blockchain infrastructure.
It's truly fascinating to contemplate. A future where digital and traditional assets just completely converge. This aggressive push for tokenized assets clearly positions Coinbase right at the forefront of that next frontier in finance.
No question about it.
Now, let's dig a bit deeper into JinLog's analytical frameworks. Because they don't just look at news and partnerships, they integrate sophisticated technical analysis to gauge underlying market sentiment, anticipate future movements.
Right, the VPAR rhythm analysis.
Yes, across different timeframes. So what's the short-term rhythm telling us about Coinbase right now, according to JinLog?
Okay, according to JinLog's VPAR analysis, the short-term rhythm indicates that the trend has broken and transitioned. Rhythm shows bearish reversal, funds flow weakening, transitioning.
Okay, let's break that down. Trend has broken and transitioned.
Means the immediate upward momentum that might have been there has decisively shifted downwards.
Rhythm shows bearish reversal.
Implies the underlying pace and direction of price movement are now favoring sellers.
And funds flow weakening, transitioning.
Suggests that capital, investment money, is showing clear signs of withdrawing from Coinbase, or at least moving into a much more cautious, defensive stance. So collectively, it signals near-term bearish sentiment. Immediate downward pressure.
Okay, short-term looks weak. What about the swing rhythm? That's typically a slightly longer outlook, right? A few days to a couple of weeks.
Correct. For the swing rhythm, JinLog notes that trend breakdown confirmed, rhythm continues downward transition path, funds flow weakening persists.
So reinforcing the short-term view.
Pretty much. It confirms the downward pressure isn't just a fleeting moment, but has solidified into a more sustained movement for the medium term. The persistence of funds flow weakening indicates a continued lack of aggressive buying at these levels.
Meaning any bounces might get sold into.
It implies that, yes, any rebounds in the very short term might be met with renewed selling pressure.
But here's where it gets really interesting. Because the midterm rhythm seems to tell a different story altogether. JinLog states the trend remains intact and upward. Rhythm forming developing. Funds flow showing signs of weakening.
The contrast.
So what does this all mean? Different time frames telling such seemingly different stories. Short-term bearish, mid-term bullish. Is that a contradiction?
It's not a contradiction so much as, well, a crucial reflection of market complexity and the different perspectives traders and investors take based on their time horizons.
Okay.
While the short-term and swing rhythms clearly show bearish pressure, weakening momentum, immediate headwinds, the midterm rhythm remaining intact and upward suggests the underlying larger trend for Coinbase is still positive.
Like a car slowing for a turn, but still heading towards its destination.
That's a great analogy, exactly. The funds flow showing signs of weakening in the midterm simply indicates that while the longer-term bullish conviction among investors is there, the current buying pressure isn't strong enough to immediately push the price higher. This allows for these necessary short-term corrections.
So the pullbacks are seen as healthy within a bigger uptrend.
It suggests that, yes, these immediate pullbacks are perceived as healthy corrections within a broader established uptrend rather than a fundamental reversal of the whole trajectory. For a disciplined investor, it encourages a view that current dips might actually be opportune moments for accumulation for those with a longer time horizon, not a signal to panic sell.
That distinction between short-term noise and long-term potential is absolutely crucial, isn't it, for any investor trying to build a sustainable strategy.
Couldn't agree more.
And speaking of longer-term perspectives, market psychology. JinLog also uses Elliot wave analysis, which sounds incredibly sophisticated. Can you give us a brief, accessible explanation? What is Elliot wave theory?
Absolutely. Elliott wave theory is a technical analysis method that hypothesizes that financial markets move in predictable, recurrent, long-term price patterns, market cycles.
Patterns based on.
It's rooted in the idea that investor psychology, collective sentiment, ebbs and flows in identifiable patterns. These form waves that alternate between impulsive movements which go with the main trend and corrective movements which go against the trend.
So trying to map crowd behavior onto a chart.
Essentially, yes. It's a way to anticipate where the market is within its broader psychological cycle. Helps traders predict potential turning points, the likely magnitude of future moves, by recognizing these repeating fractal patterns.
Okay, understanding the market's heartbeat, its ebb and flow.
Okay.
So what's the Elliott wave analysis telling us for Coinbase in the short term?
In the short term, JinLog indicates Coinbase is currently in Wave 2 corrective phase with traps unresolved and bearish rhythm dominance.
Wave 2 corrective phase, what does that mean?
Okay, so after an initial upward move, that would be Wave 1, Wave 2 is a typical pullback or correction. It's characterized by lower volume, often retraces a chunk of Wave 1, but crucially, it doesn't usually drop below the start of Wave 1.
So a pullback, but not a disaster.
Generally. And the addition of traps unresolved and bearish rhythm dominance further confirms this corrective phase is still active. Caution is warranted before new entries. It suggests this pullback isn't complete yet, could see further downside before the next, more powerful impulse wave begins. It's a period of indecision, profit-taking.
Got it. And how about the swing wave, looking a bit broader within Elliott wave?
For the swing wave, the analysis points to Coinbase entering Wave 3 impulse stage, suggesting a return of upward momentum.
Wave 3 impulse stage. Yeah, that sounds important.
It's incredibly significant in Elliott wave theory. Wave 3 is typically the strongest, most extended part of an uptrend, often characterized by accelerating price appreciation, higher volume, broad market participation as conviction builds.
So the big move higher.
Potentially. It indicates that while short-term corrections might persist, the medium-term outlook for Coinbase within this framework is for a renewed and powerful move higher once this current corrective phase, Wave 2, concludes. It's where the most substantial gains often occur.
That's a significant shift, a very positive outlook medium term. And the midterm wave, how does it fit in?
The midterm wave analysis states that Wave 3 formation underway, likely compounded by new service rollouts and partnership momentum.
Connecting the technicals to the fundamentals again.
Exactly. And what's truly fascinating here, a hallmark of JinLog's comprehensive approach, is how they tie these highly technical wave patterns directly to real-world catalysts, like the JP Morgan partnership, the everything exchange vision.
So the news fuels the waves.
It exemplifies a holistic view. Fundamental news provides the essential fuel for these technical patterns to unfold. It suggests these strategic initiatives aren't just isolated announcements. They're likely to contribute to and amplify a sustained upward trajectory for Coinbase over the midterm.
That makes sense.
For you, the listener, understanding these analytical frameworks can give you a much deeper appreciation for the structured ways pro traders interpret complex market data. Moving beyond simple price charts to a more nuanced understanding of underlying market psychology and potential future movements, it's about seeing the patterns and the forces that drive them.
It truly adds profound layers of understanding. It's not just reacting to a green or red candle. It's about where that candle fits into the larger story, the psychology, the fundamentals. Okay, let's wrap things up. Let's look at how the broader community is perceiving Coinbase and what JinLog's overall outlook and risk summary suggest for the road ahead.
Sounds good. Starting with community sentiment, JinLog notes significant bullish chatter on Reddit, specifically in the active or Coinbase community.
What sparked that?
This surge of positive sentiment was notably sparked by that groundbreaking JP Morgan tie-up we discussed.
Makes sense. Big news.
And interestingly, members within that community are pinpointing $283 as the next entry zone.
$283. That's the same level JinLog identified as the midterm entry zone and where supply is being tested.
Exactly. It aligns directly and remarkably with JinLog's own midterm entry recommendation. This confluence of opinion professional analysis and broader retail sentiment hitting the same key level is quite telling. Suggests a shared recognition of this price as a potential buying opportunity.
Interesting alignment. And what's the vibe on Twitter? Usually a bit more energetic.
Yes, energetic is one word for it. On Twitter, under hashtag Coinbase, the discussions present a more mixed sentiment. Characteristic of the platform, there's clear excitement over everything exchange. Many users anticipating the convenience, the expanded functionality, trading stocks and crypto in one place is a major draw. But that excitement is notably tempered by caution over volume trends. This reflects that ongoing concern. While Coinbase's strategic initiatives are strong, forward-thinking, the company's core transaction revenues remain highly dependent on overall crypto market activity.
So if trading volumes don't pick up across the board,
that core revenue stream could continue to face pressure. This mix of excitement and caution perfectly highlights the market's nuanced interpretation, acknowledging both the compelling opportunities and the persistent challenges in a cyclical industry.
this dual perspective from the community really confirms both the opportunities and the concerns, reflects the sophisticated interpretation out there. Okay, finally, let's bring it all together. JinLog's concise overall outlook and risk summary. What's identified as the primary driver for Coinbase's next big move up?
JinLog is crystal clear on this. Bitcoin price recovery remains the primary driver for Coinbase's next leg up.
So it still comes back to Bitcoin.
It underscores a fundamental truth in the crypto space. Despite all the strategic partnerships, the innovations, the internal efficiencies, Coinbase's fortunes are still intimately tied to the health and momentum of the broader crypto market, especially Bitcoin. Bitcoin's often the tide that lifts all boats here.
Right. A rising Bitcoin lifts Coinbase.
A sustained recovery, renewed bullish sentiment in Bitcoin would naturally translate into higher transaction volumes, greater enthusiasm for platforms like Coinbase.
So even with all these great internal initiatives, Bitcoin's performance is still the linchpin. But what are the key supporting catalysts? The things that could enable a rebound for Coinbase, maybe even if Bitcoin's recovery is more gradual?
The JP Morgan partnership and the Everything Exchange launch are explicitly named as the key catalysts. They provide crucial support for a rebound. These aren't just isolated events, they're foundational elements.
How so?
They can significantly expand Coinbase's reach into mainstream finance, diversify its revenue streams beyond just crypto trading, dramatically increase its utility and user base. By attracting new users from TradFi, offering broader tokenized assets, these developments can increase transaction volumes and revenues even if Bitcoin's growth is moderate, because Coinbase becomes more indispensable for more financial activities.
Building a stronger, more resilient business model overall.
Right.
And finally, the flip side. What are the primary risks? The potential hurdles that could cause pullbacks or dampen the excitement?
JinLog identifies two main risks: volume recovery delays and regulatory uncertainties. These are critical to monitor.
Okay, volume delays.
While the partnerships and new products are exciting, the core transaction volume is still highly sensitive to broader market conditions, as we said, especially Bitcoin's price. If overall market activity doesn't pick up significantly consistently, transaction revenues could stagnate, impacting profitability, growth perceptions.
There are regulatory uncertainties, even with the positive tailwinds.
They always loom large in crypto. Despite some positive signs, any unexpected shifts in policy, adverse rulings from the SEC, delays in key approvals like their security token application, these could trigger further pullbacks, create investor apprehension.
Makes sense.
So, for you, the listener, this balanced summary provides a clear roadmap, the core factors to watch, helps you weigh the opportunities against the potential pitfalls as you observe Coinbase's journey.
What an incredible deep dive into Coinbase. Through JinLog's unique, comprehensive lens, we've meticulously unpacked the dangers of overtrading, explored the strategic discipline in VPAR rhythm trading. We dissected Coinbase's current market position, understanding trap resolution, the critical significance of MAC points for strategic entry. We zoomed out to appreciate their robust financial resilience, strong cash reserves, strategic Bitcoin holdings, a company built for endurance.
Yeah, the underlying strength is key.
And we didn't stop there. We delved into the game-changing potential of the JP Morgan partnership, a huge step bridging TradFi and crypto. Explore the ambitious everything exchange vision, poised to redefine what a crypto platform can be by integrating tokenized assets.
Big strategic moves.
Finally, we navigated the complex regulatory landscape, understanding how clarity can de-risk the ecosystem, and then interpreted JinLog's sophisticated VPAR rhythm and Elliot wave analysis across different timeframes, skillfully tying those technical patterns to real-world catalysts.
Connecting the dots.
This deep dive has truly offered, I think, a shortcut to being exceptionally well-informed about Coinbase, providing specific details, profound perspectives often missed in just surface-level news.
Hopefully very useful for listeners trying to understand the dynamics.
So, what does this all mean for you as a curious learner, a keen observer in this rapidly evolving space? Here's a thought. Given Coinbase's aggressive move into tokenized stocks and derivatives with this visionary everything exchange, how might this profound shift impact not just the crypto market as we know it, but the very definition of a stock exchange in the coming years?
Interesting question.
Are we truly witnessing the convergence of traditional finance and blockchain technology playing out right before our eyes? And if so, what does that mean for your future investment opportunities and the landscape you'll be navigating? Keep digging, keep questioning, and we'll be here to help you unpack it all.